Hello everyone, my name is Christian. Welcome back to Tekpon. Today our guest is Genk, the founder at Tukel INC Accounting. Hello.
Hello, Christian. Hello. Pleasure meeting you again. And thank you for hosting us.
So excited to meet you. Please tell us what your company does.
Okay. Tukel INC Accounting is a US accounting company incorporated in Delaware like 5 years ago. And we provide bookkeeping, accounting, tax, and advisory services to US companies. The key thing is we're specialized in SaaS companies and PaaS companies, technology, service companies, e-commerce, and agencies. That's kind of our specialty. We also work with mostly non-US founders of US companies.
That's a very interesting niche. What did you say are the services that you offer for SaaS companies?
For SaaS companies, there are actually, well, I should say, two layers of services. One of them is what you call the table stakes, like any company in any country, like the ones in the US. We offer the basic bookkeeping, the accounting, tax returns, HR, limited HR, and payroll services. There's other filing requirements like the BR requirements, 1099 filings, the core things that you would expect from an accounting firm. But most importantly, our advisory comes into play. That's the second layer.
Mm-hmm.
Most of the SaaS companies, they have great founders, great people. They set up their company, building up a business, but they usually don't know what they don't know when it comes to managing the business. So we partner with them when we do their bookkeeping. We check their transactions, remind them of compliance issues, tax issues. We also partner with their lawyers if they don't have one. We kind of have corporate legal partners to make sure their agreements are in place. And when they start to get investors, they also want to show their financials, make presentation to their investors, future investors or current ones. We also support with them. We even attend to the calls with our clients when they want to talk to investors or VCs and as such. So we're kind of an all-in-one, one-stop shop for a US company. Everything you need, we either do it directly or through our partners.
That's fantastic. So a SaaS company can come to you and they know on the accounting side, they have a partner that they can trust and yeah, that's fantastic. What is
You.
the pricing for your services?
Our basic bookkeeping service starts from $389 per month. The tax returns, which is done usually once a year, starts from $879 per month. And our advisory starts from $399 per hour. But we make bundle deals for our clients. We have a discovery call. It's free. We assess their needs, what they need, and try to find the most optimized package for them.
What would you say are the biggest mistakes that SaaS companies make when it comes to accounting?
Well, there are many complexities that the founders face, especially the SaaS companies. Let me categorize them into two areas.
Sure.
One of them is kind of when running the business, they kind of ignore the how should I say, the security and insurance part
Mm-hmm.
in SaaS companies. SaaS companies tend to collect loads of data from their customers, either their customers' data or their customers' data, indirect data,
Yeah.
right? So there are instances I can elaborate that some of the SaaS companies has faced issues over there. With a single hack, their business was ruined actually.
Wow.
The, there's also a second thing they tend to ignore. Most of the SaaS companies that we work with are startups, small, medium businesses, and they tend to ignore the IRS, the US tax authority, or any tax authority in their own country. So when it comes to compliance and taxes, they end up with penalties. They end up with, how should I say, deadlines. And when the time comes, they want to get an investor or funding, their financials are not ready, and they're carrying all these legal risks. They tend to miss these. I understand them. I mean, they're entrepreneurs. These are boring things to do.
Of course.
Their focus should be growing their business. But having said that, this is part of the business. You're running a business. It's a company, right?
Yeah, yeah. And they should go for a partner that could help them with that. Yeah. But how about one good thing, one positive thing that you see SaaS companies do?
SaaS companies, nearly 99.9%, their founders are very agile. They adapt very quickly. Very quickly. So when they have, not just on the product side, when we work together, we work on the things that they do not know, and they really learn quickly, they really adapt, and they really want to take action. And sometimes they really tend to find very low cost and easy to implement solutions. They're very agile.
I understand. Thank you for sharing. In your vision, why should a SaaS company choose an accounting firm and not do it in-house, let's say?
I could say, first thing, for their peace of mind. So if I'm running a company, I'm founder of a SaaS company, I want to have peace of mind. My key focus should be what I believe it should be, growing my business, right? And I build a SaaS company, and while growing the business, we're managing the product development, the customer support. Those are the core things. We have to make sales, find customers. We have to do marketing. But there are other things as well. I mean, you're hiring people. You need to motivate them. You need an HR, get the contracts in place. Then you got your financials and books, and you got your investor relations. So all these things are not easy to learn. I mean, it takes years to learn these things. People study at the university, get certifications, pass exams to be qualified to do these things. If you don't have these, just focus on your growing your business, and let those to a trusted advisor, a trusted partner. It could be an accounting firm. Get the books out of the way, because you don't know what you don't know. I mean, we can talk about some of the common mistakes that we see happening.
Yeah.
Like SaaS companies, when they report their sales, very interesting. Most of the SaaS companies use either Stripe as a collection method, right? They might be using ChargeBee or Paddle, those subscription systems. Or they could be building some for themselves, but they usually pay to a collection service provider when they charge their subscriptions. And the payout comes end of the day, end of the week, or end of the month to their bank account, and they book that as revenue. That's a fatal mistake, as an example, just one example. Because what IRS will do is get 1099Ks from those collection service providers called PSPs, and report the gross collections to IRS, those companies. And then the SaaS client reports its net collection as revenue, which is lower than the gross revenue that is reported to IRS. IRS systems do a cross-check, and all of a sudden the SaaS company has an inspection. Well, you can explain it, but you have to hire a tax lawyer, an accountant, and you will incur fees, and you will have a headache, and all that stuff. So don't get surprises, don't get penalties. And the other very important thing is why you would want to have an accountant. If you're planning, especially if you're planning to get investors or sell your company, those guys are professionals, right? So they want to see the financials maintained properly in a way that they can understand. And so we end up with new clients trying to rush their things, correct their historic data. It's a headache.
I get you. I'm curious to know, most companies have an accounting firm or do they do it in-house? What are the statistics?
I should say the startups in their initial years, if they are not funded, they try to do it themselves.
Okay.
But nearly all the funded companies outsource it.
Hmm. Okay, okay. I was curious to know how important is compliance for SaaS companies.
Very. But let me let me give you two examples.
Sure.
One of them is a client of ours. It's a SaaS company. Unfortunately, got hacked. And the hack was an interesting thing. It got hacked not directed to its systems, but one of its customers had a gateway to another platform, and his customer was hacked actually. And through his customer, they hacked their system.
Wow.
And the customers of the SaaS company sued him. It was a civil action. So he's incurring legal fees on all that front. He could have done two things. One of them is focus on his SOC 2 compliance, get the security in place. And the second thing is insurance, cyber insurance, data protection, data security insurance. For SaaS companies, these are kind of two important things. Another example, again, a SaaS company, another client of ours, had investors
Okay.
at the initial stages. But he totally ignored not totally, let me put it this way, it was not his agenda or focus, the investor management. He had to do some quarterly notifications, updates, information providing. The share purchase agreements had to be very solid. And one of the investors actually sued this company for not providing timely information, for accusing to manipulate on the cap table, which was not the case. I mean, these are baseless claims from that investor. He doesn't have a point. He's going to lose the legal case. But it's taking time and enormous amount of money. Believe me,
Exactly.
and it's going up to millions that you spend on legal fees.
Yeah, exactly. But when should a SaaS company, at what stage, should think about SOC 2 and cyber security insurance?
The way I see is once you cross the threshold of, let's say, 100 customers, or you cross the threshold of 100,000 ARR, that's when you should start considering it. The cost of cybersecurity, data protection insurance is not that much. Is seriously not that much. There are many options. When it comes to SOC 2 compliance, if you want to do it yourself, it's not that costly. There are, guidelines and checklists, things to do. But if you want to outsource it, it may cost you some money.
I understand. What are the KPIs that a SaaS company should track? KPIs that are not that obvious, let's say.
Well, for a SaaS company, as you said, the KPIs are obvious. I mean, you could talk about ARR, the churn rate, lifetime value, cost of acquisition of a customer, and as such. The way I see it really depends on the prioritization. All those KPIs had to be monitored. By the way, those are KPIs any investor, anybody would want to see, and any owner, any management would want to track. But depending on the stage of your company, maturity level, if you're a new company, okay, in the first year, just started sales, you want to focus on your growth, right? You're probably spending time on sales and marketing and making lots of tests. So rather than KPIs, it's the tests that you want to do all the time. Which marketing channel, which sales channel, What am I communicating there? How much time I'm spending? How much money I'm spending? So it really depends. But a mature, as you go after the first year, other than those common KPIs, seriously, I mean, everybody knows them, right? If you Google KPIs for a SaaS company, you would get the laundry list.
Yeah.
One of the things I would strongly recommend is the cash burn rate.
Yeah.
That's usually where the problem happens. And when you see your cash burn rate, you see that you only have 3 months to live or 9 months to live. And today, funding your company, finding money is not easy. I mean, we have seen investors stopping making investments, right? For the last 6 to 12 months, and it's going to continue. It's like everything is frozen. The cost of borrowing money has increased significantly because of the global interest rates going up, right? So watch out for your cash burn rate. And if you got 3 months of cash, you have to act today, because if you leave it to the last month, it's unlikely that you will find funding at a reasonable price.
Thank you so much for sharing. I know you have quite an interesting story, so I'd love to hear how you started your career from the beginning.
Thank you. Yeah, it's really interesting. I studied business administration and started working in finance departments of corporates. So I was with actually PepsiCo for the last 20 years before I started up my startup journey. And I was their CFO of their subsidiaries, vice chairman of the board of the subsidiaries of PepsiCo companies. I was quite lucky as the CFO finance guy. I wasn't just doing finance. I was also managing the legal team. So I got into contracts and legal. I was also managing HR team, procurement team, the purchasing teams. I worked hand in hand with sales and marketing teams to go to their budget, to work with them on their return on investments, their campaigns, what's going to bring most money, how do you price the products, right? All those SKUs. You buy a can of Pepsi or a PET of Pepsi, and Frito-Lay, the chips, Doritos, Lay's, those are also PepsiCo brands. How do you do the packaging and, all that stuff? So I was really lucky to go in those fronts. And it's been 8 years. 8 years ago, I quit PepsiCo. I said, let me retire myself. I've done enough. And my own startup. And it was a mobile app. Its objective was to get users from the crowd. Anybody could be a member. And we would put in certain products and services of certain startups. And the users would be the mobile crowdsourced sales force, the sales team for those products and services. They will sell those. And if they sell, they make a commission and we make a commission. It's good for the companies because they're small and they're reaching a big network of people who are interested in selling their products and services. It was my first startup. I lost a lot of money, but I learned a lot. I built a great team. I still talk to my co-founders, one back-end person, one front-end person. But what I learned is, with so much money, actually, the most expensive master's or doctor degree you could ever have probably in your life. I was playing the boss. Candidly, get the right people, set up the office, have a nice office, and have an assistant, and get the people. Things will be done. Set the targets and KPIs. No, for a startup, a founder should be hands-on. Really, really hands-on. I mean, do everything, go into all the details, sit day and night with the development team, and go through everything and do 80% of the things myself. Yeah, and then I had to close that startup, cut the bleeding, it didn't succeed. I had a big error in my hypothesis. Then I had 3 other startups. They were successful. One in technology, the other 2 in e-learning. They were pretty successful, made a nice brand, but they were not making enough money that would satisfy me. I actually tapped into a market for which the size, the money was not there.
I understand.
And then 5 years ago, said, "Oh, let's go back to what I know the best and share this experience," and starting my accounting practice, which turned out to be a success. And we were awarded the top 10 accounting firm for the year 2022 by Financial Services Review. So we're very proud.
Congratulations. Yeah, that's an amazing story, and it's amazing how much experience you have. So so happy for you. I love to hear your best piece of advice for a starting founder.
What I suggest is kind of a SaaS founder. Actually, it has usually one of the traits is the strong one. Either a SaaS founder is a businessman, knowing the business, which is very important, or most of the instances, a developer.
Yeah.
A highly technically savvy person. Just one person, or would have another co-founder. Again, usually a developer, a technical person. Very product focused, right? So my humble advice would be, a business is a collection of different things to be done. Yes, at the core there is the product, but then there is the sales and marketing, then there is the team management, and there is the legal side of the things. I mean, we're talking about SOC 2, we're talking about customer agreements. When somebody buys your SaaS product, when you make a trial, that guy is entering your system, is using. So you need to have proper agreement, the legal part. And of course, our turf, which is the whole accounting, tax, and finance part. So a founder of a SaaS business is expected to address, I'm not saying no, but address all these different streams of a business. So you would either want to get co-founders, team members, partners who know these streams that you don't. So as a team, you cover everything.
Yeah.
Or at the initial stages, outsource these. Get some advice. Make professionals work for you rather than hiring internal teams.
Yeah. Yeah.
Make sense?
Yeah, absolutely. It's amazing. It's amazing. I have one last question for you. What are the most used SaaS tools that you see in accounting?
Well, the most frequently used SaaS tools, I mean, let me categorize our SaaS customers, what they use.
Yeah.
They use different backend tools, AWS being one, Azure being another one. So there are many other backend tools to store their code and all that stuff.
Mm-hmm.
But the most frequent tool that I see being used is like subscription management systems like Chargebee or Paddle.
Yeah.
They're very solid. Those are the ones that I see most frequently used. But when we talk about non-SaaS companies, even SaaS companies use other things that our clients use, mostly in the online industry, a certain CRM system.
Of course.
More established ones go to HubSpot.
Yeah.
The others from Zoho to Pipedrive and as such. And also an email marketing tool. That could be MailChimp, that could be Drip, that could be anything, Active Campaign, you name it.
Yeah.
you name it. At the initial stages, cost is the most important factor. You don't want to spend loads of money on that. Simplicity is the most important factor. Like, we love HubSpot. It's an all-in-one solution. It's beautiful, but it has two constraints. One of them is it's highly complicated to set up and learn if you want to leverage it. And are you going to invest your time and money in setting up and learning it, or are you going to focus on building your business?
That's a great
Right?
question.
And it's expensive.
Yeah.
But on the other hand, many of these platforms, if you're a startup with, low funding, no funding, and as such, you can apply to their startup programs and they give those products to you for a couple of years free or highly discounted. So at the initial stages, you can do this. But choose something that is simple to use, meets your objectives in the first couple of years, and try to think spending money on going big and more advanced tools when you're ready and resourced.
Thank you so much for sharing. Is there anything else that you want to mention on today's podcast?
Christian, thank you very much. I hope SaaS business leaders will find this helpful.
No, it was fantastic. I'm super grateful. You did fantastic. Thank you so much.
Thank you. Wish you a great day, Christian.